Okay. Hey, everybody. Dan Fitzpatrick here, stockmarketmentor.com. By the way, yeah, it'll probably be over after you get this. So maybe it's a moot point, but um, I'm teaching. We have a lot of new subscribers coming in, people on their trial memberships, a lot of them going through the fast track sequence. And so I'm having a chat session, basically a special webinar just for these people that are in our free trial at this time, because I just want to make sure they're getting the most out of it. And this is something that I will be hosting probably twice a month, no more than that, because there's no need to. But I just want to make sure everybody that comes into the system has a chance to get familiar with the system and get the full value out of your time here. If you decide to stick around, that's awesome. That's what I love. That's what this business is. But if you decide not to, at least I want you to make the decision, because you see everything that we're doing. And then you say, okay, well, you know what? This isn't for me. Fine. But if you haven't seen everything that we're doing, then you're not able to make an informed decision. And so that's my goal, is just to make sure that everybody in our system makes an informed decision. So if you are currently in your trial, or frankly, if you've just taken a trial, if you just signed up, let's just say anytime in January, why don't you email Karen, and she'll send you the link, and then you can at least watch. You can at least watch that webinar. Okay, it shouldn't be very long, less than an hour. So anyway, now I'll get on to what I wanted to talk about. SMCI. Okay, this thing has been as strong as death. Like they raised their guidance and they said the future's so bright, we got to wear sunglasses and then welding goggles on top of those sunglasses. Uncomfortable? Yes, but it keeps us from going blind. So these guys really hitting it out of the park. And you can see, I mean, this thing has been a real squirter. Pinched right here. This is on the weekly chart. And then I'll give you a sound effect. That's what I was looking for. So I don't know how high this is going to go, and I will tell you this: as soon as I predict that it's going to go to a certain level, that's when the end is nigh. So we don't want to do that. Let's just say that this has massive upside potential. If you're buying it here, you're absolutely buying it late. But as I have said for years, and it's been subject to misinterpretation a lot of times, that you can buy any stock at any time, at any price, and have it be a low risk trade. Now, it may not be a high probability trade, but all you need to do to have it be a low risk trade is to use a stop that's fairly close to where you're entering, and make sure your position is fairly small. Now, that sounds, it's correct, but it sounds pretty easy, and it's really not that easy, because when you try that, most of the time you're just going to get stopped out. It's just you made a dumb trade. So you have to have a well-reasoned trade. You have to have a reason for doing what you're doing. And so in this case, yeah, the time to buy this stock was on this breakout. Sure. It wasn't here, but then, man, when it opened up here the next day, I guess that even turned out to be the time to buy, because all you had to do was wait one day and you're profitable. So this is one of those stocks where you could say there were no opportunities to buy. And then you could also say, no, every minute of every day was an opportunity to buy, because this stock is still working. This is what I would suggest. If you are long, if you're holding the stock, know that this intraday low was at 501.17. We'll call it 500. This intraday low was at 503 and change. So we'll call both of these 500s. Okay, so this is what I would suggest. If you're long the stock, then keep a stop. Sorry, I got lazy finger here on the mouse. This is what you do. Now I changed this to red. Okay. So you keep your stop just a little bit below 500. And that way, you're only stopped out when this stock makes a lower intraday low because it hasn't made any real lower intraday lows. This one, yeah, slightly, but still not a lower intraday low. Would I be buying this stock right here? I actually wouldn't. I'm just saying, because it's easy to look at this and say, oh, look, okay, big reversal yesterday. It looks like it's going higher today. I got to get in. And that's fine. You know, you can get in. I've just showed you like where you'd put the stop. But the problem is this. This is not a strategy. Buying a stock because you hope it, buying an extended stock because you hope that it's going higher is not a good way to trade. And so I'm looking at this and I'm talking to you about it and I'm telling you how to stay long if you're in the stock, keep a tight stop, protect your profits. But what I'm also doing is saying, if you want to be the guy to buy this stock here when it's so extended, at least have a protective stop a little bit below 500 so that you don't literally get left holding the bag. Okay. Because to call somebody a bag holder is never a compliment. So don't be one of those guys. Okay. So anyway, that's all I got for you. I got to get ready for my new member welcome mat in about an hour or so. See you guys later.